everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with a brand new guest. The title of the work he does, he's part of Arcadia Economics. You can visit his website, and it really struck me. I'm actually born in Arcadia, California. I lived there for a number of years. I was married in Arcadia, California, so there's like a lot of nostalgia that comes when I hear our new guest, Chris Marcus of Arcadia Economics. Now, it has nothing to do with the city, and maybe he'll give us a little background on where he got that name from. But we're going to be diving into metals today. I mean, we're seeing platinum, palladium, rhodium really skyrocket here. I mean, really see some movements in these metals here in 2020. And, there's a lot of the free thinkers out there, people that are really not plugged into, what the conventional media is saying. And this is one of them. I say there's a lot of them. There's a lot of people that I like to speak to, but really we're a minority. And it's, fortunately we're getting bigger out there, right? It's because of guys like Chris who are spreading the word, and thankful for the internet. We have this decentralized platform to give us this opportunity to have free speech and get information out there. So, man, without any further ado, Chris Marcus, thanks for coming on Crush the Street with me today.
Kenneth, thank you for the kind intro. Appreciate you inviting me on to the show. Looking forward to digging into the metals, which was fascinating enough that I left Wall Street in 2012 to continue researching and understanding. And one note, are you aware that there's actually a movie, Arcadia, about your city in California, Kenneth?
I haven't seen that. I'm going to look it up and watch it.
What wasn't the most uplifting film, but maybe they could have made one about you. You got a nice smile over there, and you're digging into important stuff that I think is really relevant to folks today. So happy if I can add any insight to that.
Well, I mean, it was just right outside of Hollywood there in, the California area. And, it goes back. I mean, it's in old movies, the racetrack, and just right outside town there in the Los Angeles area. So it's on the map to a certain degree, but I'll definitely check it out. But let's get into it. You were just at the Vancouver Resource Investment Conference, really ground zero, boots on the ground, where the biggest mines, I would say, in the resource space are now concentrated, the mining companies. I mean, tell us a little bit about what the sentiment was like here in January 2020. I mean, a different change from really what we've seen, I think, a year ago, the prior year, when it might have been a little more unknown if we were in this confirmed bull market in precious metals.
Yeah, there was a different vibe. This was my first year at that particular conference, although having gone to several of the other ones like the Sprott Show and also talking with a lot of the people who've been going there year after year, I think that the move we saw last summer where gold finally went up a couple $100, silver finally trading above the cost of production, which go figure, that would help a few businesses. Certainly I understand there's a lot of folks, myself included, who still are looking back at $49 silver in 2011, seeing the debt loads have expanded wildly since then. The Federal Reserve, despite this idea that we had this quantitative tightening over the past couple of years, there's really a lot more talk about tightening than actual tightening. So, obviously for the folks who bought silver at 30 or 40 bucks, still maybe not getting excited yet. For a lot of these mining companies, that move has made a big difference, has made things a lot easier, and has started bringing investors back into the space. So definitely a different environment. And as you mentioned before we started, certainly with palladium and rhodium starting to go vertical, a lot of interesting things happening there, which of course we can dig into.
Yeah, certainly. I mean, we're seeing these parabolic moves, specifically in rhodium, palladium. Platinum's moving higher. Rhodium, what is like close to $10,000? It was $6,000 at the start of the year. So I mean, that's really a a parabolic move in a very short period of time. And I think it's kind of good for investors to see that that is possible, and kind of a canary in the coal mine for precious metals, because I think we've been conditioned to think that there is no hope for gold, there is no hope for silver, and that they're dead in the water, so to speak. But I mean, is this these platinum group metals? I mean, rhodium. Is this happening because of catalytic converters and automobiles, or is there something going on behind the scenes? With fractional reserve lending and unallocated pricing schemes that are really contributing to this.
Well, I can speak a bit more intelligently to palladium, which perhaps isn't far from an expert in palladium, as I dig quite a bit into silver, although was interesting. Spoke with a fellow I've had on my show, David Jensen, who's really been ahead of the curve on palladium. And what a lot of us in the metal space have been looking at, because you really did mention it there, Kenneth, the fractional reserve system where you have all this paper hammered on the markets. Keep in mind, you could have the Fed come out, announce QE 5, 6, and 7, or whatever numbers we're up to, and you could have people buying physical gold. Actually, have a link I can send over that really puts in perspective some of the dynamics of how what's happening in the physical market is a separate entity from what's happening in the paper market. Yet if you sell the same piece of metal 100 or 200 or 300 different times, that can go on for a while. As we've seen, it can go on for a long time. Although once people start showing up and asking for their metal, which I think we're seeing happen more so in the gold market and starting to filter over, although you have palladium there, which is a very small market, and you have people or companies that are using it for industrial purpose. So there's a finite demand. I don't think that we're seeing really a big explosion in investment demand for palladium, but there's industrial demand. A lot of it's been sold forward. And what it was interesting, I actually did have a chance to sit down with David while we were there, who tracks the lease rates. And even as the price of palladium, which looks like it's around 2,400 today, even as it's continued to go higher, the lease rates have continued to go higher, indicating that we're not seeing a resolution to this. Because often when you have a situation where a market's out of balance, the price goes up or down or whatever in that given market, and you see some sort of equilibrium come back in. Yet,
So let me jump in right there. So as an ambassador for the common man, explain lease rates to people, and why that's important for people to understand.
Well, essentially, another one of these fractional reserve mechanisms is that you have the gold and silver and people borrow it and do various things. So as the lease rate is going up, that means the cost to borrow it is going up as well. So basically, the price is going up, yet no one's saying, all right, yeah, I want to go in and sell my palladium now, because it seems as if we may be reaching the point where there's demand is X and the metal just simply isn't there. And really the risk in any of these physical markets, especially for the precious metals, you don't just flip a switch and say, all right, well, we'll go and tell them to mine out X many ounces tomorrow. This takes quite a while. That's what I've expected to some degree in the gold market, more specifically in the silver market, where again, you have a similar dynamic that silver has that monetary component, yet also is used in industry. And if we're going to continue, I mean, maybe we'll stop using computers and cell phones and electronics, yet if we're going to continue using them, we're going to need silver. And when you factor in that so many people think they own the same piece of metal, it's almost setting up that ending of It's a Wonderful Life, where it's fine until people want the metal, but once you have that one guy show up and say, I want physical delivery, and it's just nowhere to be found. That's essentially what I left Wall Street in 2012 to dig into and cover. I've been stunned as I learn and research more, where especially now that you have negative yielding junk bonds. You have the Fed putting more money than during the quantitative easing programs into the markets, whatever they want to call it. I'm wondering if we're getting closer to the break point.
So, Chris, tell us a little bit about that. We talk about what's happening on the industrial side, and kind of talk about it from an investment perspective or a hedge against inflation. What are you anticipating? What are you expecting to happen to the dollar in this environment where there's endless QE and monetization of debt, and the debt ceiling doesn't matter anymore, deficits don't matter anymore? What are your thoughts on it from that perspective?
Well, I'm going to put this one bluntly, not to scare anyone, but maybe to make the point. The White House, the Treasury, and the Federal Reserve, they have turned our financial system into a Ponzi scheme. And again, I understand, and I don't want that to scare people, but maybe to catch their attention, because we have the debt, what is it, 22, 23 trillion, add in the unfunded liabilities, which, the calculations come to another 100 or 200 trillion. The Federal Reserve, which Ben Bernanke told us 10 years ago how we were going to have everything solved by just printing up a fresh batch of hundreds. But this has failed every time it's been orchestrated in history. Yeah, the technology has changed, the names have changed, yet there's a reason that if it sounds silly that, well, the economy is weak, we're just going to print money and that's going to solve everything, it's as silly as it sounds. And now we've reached the point where, once again, the Fed is directly monetizing debt. We have a banking system that's running into problems that the Fed can't even acknowledge. I mean, to me, the audacity that Jerome Powell and Donald Trump come on and tell the people they've sworn an oath to serve and protect everything's fine, yet why are you adding, I think it's up to 400 billion since September, to the Fed's balance sheet? I mean, clearly there's something going on in the banking system. The fact that the Fed claims to not know what it is, I don't know if that's supposed to make me feel any better. But actually what it does remind me of is how in 2007, 2008, as the subprime bubble was collapsing, Ben Bernanke and Hank Paulson were telling us subprime was contained, and anyone who followed their advice got absolutely clobbered. So now if we could switch to the positive side, because again, I think that's unfortunate. If you made me president or chairman of the Fed, it's not the way I would choose to do it. I don't think there's a lot of integrity in what they're saying. Yet with that said, for folks who are able to see this just in the same way, I know people love that movie, The Big Short, which did such a great job of pointing out how people saw it in advance, and they did well. You can protect yourself. You can see these things in advance. It doesn't have to be the end of the world. Even during the Great Depression, there were investors or people who just even saw the trends with their business and saw, okay, there's something building here that's going to have a reaction. And when you see these things, you can make preparations, of which the metals, or some people get into the mining stocks, is certainly one of them. So I'd really like to emphasize that more so, that it is perhaps an unfortunate situation, yet there's a great opportunity for the folks who are able to say, all right, accept what it is, accept what's here, but let's see how we can use this to our advantage.
Chris, one thing that I would think we can all agree upon is the political divide that we're seeing in our country right now is probably the greatest we've ever seen. I mean, I'm as old as I'll ever be at this moment right now, or I'm as old as, and so I feel like I've been around for a while, but I really haven't been around that long. But it feels like a great divide when it comes to politics and what we're seeing come out of the government. And I know Trump's a character, so people hate him or like him. But, with the impeachment, is this a sign of what we are seeing the underlying economy result in? I mean, is this a consequence of what's going on beneath the surface with the frustration that people have with the economy and what's going on around the world?
I think so. Again, a political analyst, I'm not, although I'll do my best to answer that question. I can only share my own belief in that for the last couple of years, I've wondered, is Democrats and Republicans, is it a way to keep everybody divided and fighting against each other while whoever's really running the show on the upper levels is sitting there giggling? I mean, I remember when Trump was first becoming president. Back then, I was maybe a little more spending more time on Facebook than I do now. Yet seeing people who at one point were friends and just, if this guy liked Trump or this guy didn't like it, and the venom that was going back and forth, and yet in the end, the second Bush came into office, he doubled the deficit. Obama came into office, he doubled the debt amount. They're both spending a lot of money trying to tell other countries how to live and, building bases, which is there much difference in reality of the two parties? And in the end, here we now have Trump is in office. I hadn't realized that one of his promises when he came into office was that he was going to balance the deficit. Obviously, that's gone the opposite direction. I'm still confused because there's this clip of him talking with Hillary Clinton and during one of the debates, calling it generously, fighting with Hillary, and he's saying, well, we have a big fat bubble that the Democrats got the Federal Reserve to fuel, and yet here it is now. He's saying we want negative interest rates, quantitative easing. So, in the end, how much of this is real, what we see, what these guys come on and put on TV? I know the latest thing capturing everyone's attention is this impeachment trial, which fortunately I do my best to tune it out at this point, because put another way, would you invest in a business where the people running the business behave like what we see out of the politicians? I mean, it's like a married couple that should have been divorced 20 years ago, just battling back and forth. And yesterday when I was coming home from the conference, I'm in the airport, I see the TV screens, and there's someone, they're going to send this impeachment to the Senate or to the House. And I think that it's unfortunate because in the end, it's all of this money being spent and just fighting and anger and animosity, where it's like, wait a second, what? You guys are so focused on this. What about the people that you're supposed to be serving here? Where's the emphasis on that? And again, I wonder how much of it's just to keep people distracted so that, again, they can continue printing money. And perhaps why I focus so much on the metals, which, yes, there's the financial element to it, yet I think there's also a bigger life element that's impacting people here, because at the end of the day, everything that government does is now based on the ability to print money. Because we've seen they can't borrow the treasury debt anymore. China's developing petro-yuans. They're working with Russia. Every time they say the U.S. sanctions Iran, they're coming up with non-dollar trade agreements. I think you're seeing the world. It doesn't matter. Nobody has to take my opinion for it, but you're seeing the counterparties around the world, the countries that used to fund this debt, reaching a point of frustration where they see what these guys, Pompeo and Bolton, and just starting trouble basically anywhere they can. They see this, and they see that it's funded with printed money. That, I mean, geez, if you were China and you keep lending money to the U.S. and they tell you you're a currency manipulator and you're sending products here, getting IOUs back, I mean, I can certainly understand why. In fact, let's say China realized that this U.S. financial system is on borrowed time. Let's say they did realize that 10 years ago. And you think, well, what would they do? I don't know. Would they develop a contract to trade oil outside of dollars, which they've done? Would they start buying gold and every piece of gold that they can get their hands on, which they've done? Would they perhaps start organizing agreements with other countries? You know, it's all happening now. And I understand and I feel for the people who have purchased precious metals and been pounded over the last 10 years. Although I think, Kenneth, you touched on it in the beginning, where I don't think it's an accident creating this environment where people are frustrated saying, well, I'm tired of hearing gold or silver should go up. At the same time, you have banks. And again, this is no longer conspiracy theory. JP Morgan charged with the RICO Act. The RICO Act, which is normally reserved for organized crime. Although interesting, the Department of Justice actually described JP Morgan's trading desk as a criminal enterprise. And I hear that that's uncommon for them to use phrases like this, but we're seeing a lot of these crimes exposed. I think that from a financial market standpoint, it's set up a dynamic that's going to be very similar to 2008, where the markets will sit there, the stock market will probably keep going up as long as they're printing money, yet you're set up for a break point that I wish I could tell folks exactly when that will be, although it's something we certainly talk about quite a bit on the show that I run. Yet I would say for people who can adopt a healthy mindset, I mean, if you just wanted to go to an island, buy some gold and silver or mining stocks or other assets, these are the ones I focus on by all means, agriculture or commodities or other things that we actually use that aren't paper rehypothecated shares. You don't have to sit there and worry about gold go up $10 or down $10 these days. If you can have a long-term perspective, I think this is a field day for people who can adopt that mentality and see all these data points that are out there. CNBC is not going to connect them for us. But again, Kenneth, I appreciate that you have a show where you're mentioning these things because they're out there. We've been conditioned not to see them, yet if you can, I think that you can turn what is not ideal into a great opportunity.
You spoke about the craziness of how the government acts, the political divide. And I mean, nobody would go to a restaurant where management was fighting the way our governments fight. I mean, they would just go to another restaurant, right? But in the case of our U.S. government, that's the only restaurant that we can really eat at. Obviously, you can move or do some crazy things, but largely on a large scale basis, 330 million Americans are stuck with what we have. And, the world is kind of stuck in this paradigm of, the U.S. in control and, the rest of the world is kind of doing the same thing. So even if you go out of the U.S., you're largely eating at that same restaurant with the same divide and the same problems that exist. So it's just this odd dynamic where there's this control over the global economic system without a real opt-out. And I guess the opt-out is, what do you do with your wealth? Where does the financial capital flow when management loses control, right? And that's what we're trying to prepare for.
Yeah, and I think you're seeing that happen. I don't think it's an accident that while the crypto market has been a little bit quiet over the past year or two, I think there's a reason why people are looking to Bitcoin and other cryptos where, I mean, let's say that you want to move to another country and don't want to have to pay all of this big chunk of your wealth so that politicians can go rig markets, build tanks, and send them different places. I mean, when you actually compare the mechanisms of a crypto versus the dollar, I mean, your money gets there faster, the fees are smaller. And I think we're seeing it happen now. It's unfortunate that it's come to this, yet maybe there is a way we can go to another restaurant because in the end, a lot of this does come down to money. And the lifeblood of this current system is the paper money. And like you pointed out, that's going on around the globe. Yet I think for people who can see what's happening, I don't know, maybe it'll be 2020. Maybe they drag on fractional reserve banking a bit longer. Although I would suggest to anyone who's ever been out there and feeling, well, all right, I get this, but what can I actually do about it? I would say that just seeing these things, hey, maybe your neighbor, you've tried telling him a couple times and he doesn't get it, but one day he wakes up and is like, hey, yeah, I finally see what you've been saying. Don't call him a sheeple or say, how come you're an idiot that you didn't. We all get it at our own time. And I keep thinking back how there's a lot more of us than them. And I wonder if perhaps it's kind of a similar dynamic to the slave and slave master relationship, where the slaves, they were out there in the fields making all the stuff. They were doing all the work. And then there's just this one guy sitting there harassing everyone on top. One day they throw him into the ocean. They're like, wow, we can actually enjoy all this stuff that we've been making, which I wonder if that's similar to what China's feeling, where, hey, rather than sending all these products we're making while our people are struggling, we can enjoy the fruits of our labor. And if you imagine, without all this wealth being diverted to the political sector, I think the more people who understand what's going on, I don't think it has to be a 51% majority. If even 3 or 5 or 10% were listening to shows like yours and grasping these things, and sometimes maybe it can even be as simple as supporting someone who's at, not everyone has to go start a show or become a political activist, but you can support other people who are doing that, or just being kind to each other. I see the metals guys and the crypto guys often fighting back and forth, and I'm like, hey, we're on the same team here. Let's keep this energy focused in a positive way. I know there's that temptation to see the frustration and anger. By all means, I've been there, and the focus of my life is letting that go and saying, all right, here's where we are. How can we make the best of this, and what can we do? And I think people are wondering any single thing that they can do. I think starting there with ourselves, and you do that, and you'll see quickly people will be looking up to you and following you for advice. And Kenneth, I know that you've seen that, hosting the show and bringing light to a lot of these issues. And again, I just really appreciate that there are folks out there like you that are doing this.
Well, thanks for the kind words there. I do have one more question for you, and it pertains to, the miners. I mean, the HUI is the gold bugs index is around 231 at the moment. I mean, a year ago it was roughly 150. But if you go back to 2016, when gold was, I think it hit 1400 for a second, and then came right back down, lower than it is now. I mean, we saw the HUI, the gold miners, trade higher than they are today, which is kind of a backwards thinking. And again, it goes to that, how much confidence is there in the sector? And I think that it's gold, the precious metal sector is just earning that respect once again, because clearly gold is much higher than it was in 2016, but the miners aren't necessarily higher. So maybe give us some closing thoughts on this, and your thoughts on the miners.
I think the answer is what we've encapsulated in the past 20 or 30 minutes, however long we've been going. I think people still feel the burn. They still feel the scars. I hear from a lot of fund managers that, well, it went up in 2016, then it came back down. We're going to wait and see. So I think there's a lot of that in there. Can I guarantee that gold and silver, you don't have a paper hammer drive the price down tomorrow? Unfortunately, you can't. Yet that's why, if you can take a longer term perspective, I would say, as certainly as the mortgage market had to collapse eventually, when it did, it took whatever time it did, you have a very similar dynamic where, you have negative yielding junk bonds at this point. Some of this stuff is getting silly. When that reverts, I guess we'll see. But I think for folks who can take that long-term perspective, especially what I look for in the miners, I want to make sure they have a balance sheet that's in good shape. Hey, if silver is still at 17 or 18 bucks 2 or 3 years from now, is that miner going to be able to withstand that? Some are, some it's a little risky yet. If you have companies that have metal in the ground, that are managed well, that are prepared, and I saw there are plenty of them at the conferences, and that's one of the things that's nice. You can go up. It's not like people invest in Facebook or Tesla. Good luck catching up with Zuckerberg or Elon Musk. One of the things that to me is really beautiful about these conferences and in general, the people who get into gold and silver, you don't find that by accident. So there's often a free market, sound money basis and foundation behind that. So you can go and meet these companies for yourselves. I bring plenty of them onto my show and talk with them there. And again, if you find ones that fit what you're looking for, I am a believer that we will see above $50 silver, above $1,900 gold. I personally think it will be sooner than later. Yet, okay, a factor in, saw at the Hunt brothers, they can change margin requirements. And given everything that rests on this paper dollar, to me, I think the real risk we're pricing in is how will they change the rules? What, who knew quantitative easing would be an option, until the Japanese tried it and then until it came here. So yes, prepare for things like that, but still math, gravity, natural law, and supply and demand. I think if you take a longer term perspective, there's a real opportunity here, and it's challenging time for folks. Yet if you just stay patient, and again, don't do anything because I think it, but just look perhaps at some of the things I've introduced and say, it doesn't seem to add up in the way the government's telling us. And certainly, if you pick miners that fit, your own parameters, I think people have the ability to get similar results to what some of the folks in The Big Short did. I'm not giving legal financial advice, but just simply sharing how I believe this will indeed play out.
Well, good words right there, Chris. Chris Marcus, everyone. Chris, thank you so much for gracing us with your knowledge and wisdom of the markets. If people want to learn more about you, the work you do, your website, where can they go and what can they expect to find?
Well, Kenneth, again, thanks for having me on the show. Appreciate that you're doing this. Appreciate the opportunity to share this. You can find me at arcadiaeconomics.com. Have a YouTube show, which is Arcadia Economics. We dig into all this stuff with experts from around the world, with really the genuine goal of helping people. I lived through the mortgage bubble on a trading floor. I saw understandably why people were upset and wanted to make sure there was a place people could get good information similar to what you're doing, Kenneth. Last, if I just might mention, for anybody wondering more detail about the metals, the manipulation, how this plays out, especially in the silver market, about to release a book called The Big Silver Short, which digs into all that and was really designed to make it easy to understand so people can say, now I get what's going on, I can make decisions for myself. You don't have to count on JP Morgan or Goldman Sachs to decide for you, and be happy to help in any way I can.
So great. I look forward to reading that book. Chris, thank you so much for coming on Crush the Street with me today.
Thank you, Kenneth. Appreciate it.